Jerry, welcome to WealthTalk today.
Thank you. Thanks for having me.
Yeah, you're very welcome. And today we're talking about how does someone get started in commercial property. So I think you're going to dispel some of the myths in this conversation and show how commercial property investment can work for those of us who are not from a commercial or a professional property background.
Yeah,
And
sure.
before we begin, why don't you tell our listeners a little bit about who you are and what you do?
Okay, great. So I work for myself. I started working for myself back in 2000, so just over 20 years ago. And I've had a few different businesses, some of which are still going. We have a merchant business, a restaurant, and our main thing though is commercial property. We started off investing in resi, but commercial is now our main strategy.
Yeah. So let's dive straight into it then, Jerry. How and why did you get started in commercial property?
Okay, so like probably a few of your listeners, I came across Robert Kiyosaki's Rich Dad Poor Dad a few years ago and thought, right, I need to be doing resi. So I started investing in residential property to build up. I guess at the end of the day, it was about building up cash flow, but also wealth for the future. And I did a few deals, and then I thought, how do I get a bigger deal? Because a lot of the time on these things, people talk about big deals, and they're trying to work out how do you actually find a big deal. I didn't know what it was going to be, and in the end, I found an office building that was fully occupied, and I bought it at a reasonable price, and that was my entrance into commercial. There wasn't really any more major strategy other than I need to try and find a bigger deal that's got better cash flow, and that's how I ended up getting into commercial. But then as I progressed through it, I started to understand how jolly good that sector is.
Well, before we dive into the particular strategy that obviously you have settled with now, Jerry, just to give our listeners some perspective, when did you start investing in property? How long has the journey been? Because, many people, our listeners are at different stages, right, of their wealth building journey, and people often want it to happen quickly. But, when did you begin, Jerry?
So I first started I bought a piece of ground in 2000, which we speculatively built a house on, which when I got out of that deal, I just managed to get out without losing any money. So that was my first baptism. And then it was about 4 years doing residential before we bought commercial. And then about another 4 to 5 years before we bought our second commercial. So it's not been a rush. If I look back and I could talk to myself back then, I would definitely have done it faster. But I was doing other things. It was just something I was building up because I was looking at building up long-term wealth.
Yeah. So you talked about that kind of light bulb moment. You realised commercial, there was something going on here that excited you. You could see some potential. So how did that develop, and what's the main strategy that led to?
Yeah, that's a great question. So none of this has really been fully by design, right? So let's just get that out there. I'm not some genius, but what happened was I bought that commercial property without knowing how much influence rental has on the value of property. So over the years, my primary objective was to increase the cash flow. That's what we were investing in property for. And I then spotted another building about 4 or 5 years later, a commercial one. It was half vacant, and I had to go to the bank and say, right, can we, let's talk about raising some funds for this. And of course, they wanted the revaluation on the property that we'd done originally. That's when the light bulb moment came, because we got a valuer in, and the value tripled. And the reason the value tripled was because we'd taken the income from relatively modest level up to 3 times the amount of the net income. So the building hadn't changed. Yeah, we'd have made improvements. The customers, some of them had changed for sure, but what had changed dramatically was the income, and that totally affected the value of the property. So that was the light bulb moment for me. It was like, oh, so this isn't just a passive activity. You can actually be quite active in commercial and add value. Whereas residential, you can add value to an extent. You add an extension or other parts, or gold plate everything, but ultimately your value is pegged back by the properties around that location. Whereas with commercial, there's so much more influence on value based on the cash flow and the net income. So I didn't know that when I started, but then I realized, okay, when I looked at that second building, now we've actually got an equity pot here we can leverage. So we ended up buying another multi-let building, and then a few years later another one, and now we have a portfolio of multi-let buildings with 200 odd commercial clients in all renting office spaces or storage units or whatever it is that they're after. And we've ended up with quite a business, really, from where we'd started with just one or two residential houses. But all the time, the strategy is buying buildings that maybe people don't quite know what to do with, adding value, changing how they work or how the layout works, putting in lots of commercial customers and increasing the value considerably, which allows us to leverage for the next one.
Mm. And it sounds like there's two aspects to that, Jerry. There's the ownership, but then there's the operations side of it as well. So what's the relationship between those two?
Yeah, great question. So you could choose to do the property side. So we've got a propco and an opco, one being a property company, the other being an operations company. You could buy a building, do all the refurbishment and whatever needs to be done, effectively the redevelopment, and that would be held within a property company. Then the operating, which there is more on our niche, there is more operating on a day-to-day, and we have an operating company that sits there effectively as the tenant. And we have our staff in there, our customer contracts, our supplier contracts, so everything's ring-fenced in a separate entity. And that entity then pays, well, actually effectively it's a management fee up to our property company. So the two of them can sit quite separate. So you could do both, which is what we do, or you could just do the operating company, or you could just do the property company. Obviously, the property side is really where you're going to build your wealth through increasing the value of the property. But the operating business that we have has a few employees, 200 odd customers, and there's day-to-day operations. But we've built up a team in there that now run that. But if you were doing HMO or serviced accommodation or all the other residential strategies, it's the same thing. You can either do it yourself or you get somebody else to do it for you.
Yeah. Now, Jerry, you're familiar with the Wealth Builders process, the 7 pillars of wealth, and diversifying across multiple pillars gives you that peace of mind, gives you security, gives you multiple streams of income. So many of our listeners will probably be invested in residential, and it's the start of a new year. It's obviously, challenging times across all markets, really. But what would you suggest is a good way for someone who perhaps is in residential at the moment and they're looking to get started in commercial?
Okay, so the first thing is get in the swim, find out what's going on, speak to people. Maybe agents is a good place to start, of course, but find other people that are operating in commercial property. I mean, it can be quite opaque, this industry, and when you're standing on the outside looking in, it looks like the curtains are always shut. You phone up an agent, they don't return your call. You drive past the building, it's got for sale sign, you phone them up, apparently it was sold 2 years ago. It's quite challenging sometimes, but I think that's the best opportunity about this market, because it is a bit more difficult to penetrate. But I don't think you have to jump in with all, both feet. You can start small. That would be my main suggestion. Start small, buy something that has got less risk. Okay, there'll be less upside, but it gets you in the swim, teaches you how to find property, how to finance it, how to get tenants in, how the leases work, all that stuff. So you can build up your confidence and your knowledge. But if you have your own business, that can often be the first natural way into this, is you use your business as the tenant. And it might be that if you have, for instance, a pension where you can buy commercial property, you would effectively, your day-to-day trading business would be the tenant, and your SSAS or whatever would buy the property and move your own business into it, so that you're able to collect that rent rather than paying it to someone else. And interestingly, if you're wanting to actually look at developing commercial as a strategy for building wealth, then just buy something that's a bit oversized, and then you would be able to potentially get another tenant in to a section of the building that you're not occupying, to generate more income. And that's often the way we teach people to get started. It's just, if you've got your own business, use that as the main vehicle to get in as a tenant, but oversize the property so you can start letting it out, subletting effectively.
Yeah, yeah, I like the way there you've mentioned obviously business pillar, you've mentioned the pension pillar as well. So leverage is key to building wealth. So, multiple pillars there working together sounds like a really, really great way to get started. And inevitable question really with the current climate, Jerry, people listening going, well, God, is now the right time? Is this a good time to be investing in commercial? So what would you say to that?
Okay, so if I may, I'll take us back to 2008 through to about 2013 when the last bump in the road. Um, the what happened then was that money stopped. There was no money, right? Obviously, it was the credit crunch, so money ceased to be available, which had ramifications. This time round, I think there's a lot of money about. The government's put a lot of money out. Companies and individuals have saved a lot of money. They've not been spending. I think actually there's a lot of money. So it's not necessarily a liquidity problem. I think this time around it's more of a cash flow problem, where some people may not be getting the income depending on if they're exposed in an exposed sector. So I think there's going to be opportunity for buying distressed assets. And back in 2008 through to 13, those assets came onto the market. Initially there was a few, and then there was others that drip fed in as leases came up or companies maybe properties got taken back by the banks because they had to do a revaluation. This time round, I think the revaluation piece will take longer because the government's not keen on people getting kicked out or tenancies being broken because of covenants on paying or whatever. So at the moment, you're not allowed to cast out leased occupants, for instance. So I think the banks will have to ask for a revaluation. When that happens and the loan to value covenants are broken, that's when these distressed properties, will start popping on the market. But it's important to remember commercial is not one strategy. Some people think commercial property is another strategy of property. It's an umbrella, but underneath that there's many different strategies in different sectors. And whilst retail is maybe struggling right now, industrial is flying, storage is doing really well as well. These are two sectors we're in. All our stuff is 100% full. Office space, 20,000 square foot building might not have many potential customers right now, but there's a lot of people looking for small space because they can't go to the head office. They're sick of working from home. They need some place where they can go to work, close the door at the end of the day and go home. But they don't want to be taking on a space that's 5,000 square feet. They just want 200 square feet. So there are sectors that are doing really well. The key is just keeping an eye on what demand is. So if you find a distressed asset, can you develop that to satisfy that demand? So it's just really about getting involved in the market and understanding the different layers. If you're looking locally at the different layers of what's going on, and because the product offer out there, as well as being retail and leisure in different sectors, there's all these other layers, like what about the size of the space? What about the quality of the space? What about the contract for the customer? Are they looking at a 15-year lease, or are they looking at almost like an incubator space where they do everything for you? And being able to see how all those pieces fit together allows you to spot opportunity. And I think at the moment one of those opportunities is flexible space, smaller sized units, and in more regional locations. And certainly where we have that offer, it's doing really well at the moment. And in 2008 through to 2013, it was noticeable the difference because people didn't want to move into very long leases. They wanted a little bit more flexibility. So our particular niche does well during this period. But the key thing is just understanding that you're looking at an asset, property, office, industrial, whatever it is, and you're just trying to be creative enough to work out what is current demand and can I adapt this building to suit it, rather than just buying a building and sticking it on the market and hoping somebody's going to take it, because it might be that the actual layout is now obsolete, but the building isn't. You've just got to reconfigure it.
Yeah, getting a little bit creative there.
Yeah.
And we said at the beginning, Joe, dispel some of the myths. You obviously work with lots of people who are taking their first steps to get into commercial property. What are some of the things that you perhaps hear that holds people back?
Oh, crikey, yes. So yeah, you're right. I do work with newbies. One of the things that holds them back often is familiarity. So they might be doing residential, and it's always easy to go and buy another house, to be distracted and carry on with another house, even though they want to get into commercial. And I've found a few students, well, they want to do it. They understand that there's some real good benefits in there, and some things like tax, which we haven't spoken about, but they get distracted by another residential project. So part of it is just staying focused. The other bit is just people are just a little bit scared because it's a little bit different. Most of us have lived in our own home for a while and understand generally how the residential market works. And in commercial, sometimes you just need a little bit of hand-holding just to work out how does this thing work. So part of it is the mystique that's built around commercial, and my job really is to try and help people remove those barriers and just see it for what it is. And part of it is not knowing how finance works in there and how surveyors work, because in resi it's quite transparent, and valuations are reasonably sensible, but in commercial it's a lot more down to this old boys network. Valuers can be quite different in their approach to things, so a lot of the time it's just the unknown that's holding them back, and the fact that they know residential, they want to just carry on with that because it's easy, it's kind of the thing they know. But ultimately, you've got to take the first step. So I always just encourage people to make small baby steps. That's the first thing. Then you can start working up to these big strategies.
Yeah. And no matter what the strategy is, for many people, it's a mindset shift, right? Because it's a transformational process of what you know, and then going into the unknown, and just being clear on, I guess, what the end goal is as well. So I'm sure that you have that conversation with people to understand really where does this fit into your bigger wealth plan.
Gosh, absolutely. You must get this to work for you, not against you. You have to work out what it is you want it to do first. Because the thing is, when you're looking at commercial property, there's loads and loads of opportunity out there, but our job is to spot what is an opportunity and what is a distraction, because sometimes some commercial properties and strategies will not help you with your long-term goal, but they initially look attractive. So if you don't really have a clear idea of where you're trying to get to, it becomes more difficult to assess whether this project you're looking at is an opportunity or distraction. So absolutely, the first important point is work out your key investment criteria. So it helps you evaluate projects really quickly, but also when you're talking to agents, it allows you to give them something a bit more specific rather than saying, I'm looking for a commercial building where I can make lots of money.
Yeah.
Because that doesn't always work.
Yeah. So Jerry, you've already given us lots and lots of value today. Is there anything else in terms of someone getting started that we haven't covered that you just want to add before we kind of share where people can connect with you if they want to find out more?
I think it's much less worrying, don't worry about this market being very difficult to get into, to understand. A lot of the fundamentals are exactly the same as residential and business investment. You'll have the same kind of strategies. It's about working out what you want, working out what assets will do what, and I guess using your background to work in this market or the commercial market with just a more level head, because some people just think it's a completely different thing, and it's not. It's really down to the usual basics and fundamentals of business. The key thing, I guess, is when you're starting out is working out, am I going to be a passive investor or am I going to be an active investor? Because in commercial, this is what I thought it was the only thing you could do. You can buy an asset and basically buy an income of 10%, 15% return with a long lease, and that's it. But actually, if you want to build value, you can be quite active in commercial. And I didn't understand that. That's when that light bulb moment came, was actually, hold on a minute, I can actually affect the value. This is not a park and hold strategy, which for some people it is, and that's fine, but you have to work that out up front. Am I want to do park and hold, or do I want to get a bit more active and creative? and the beauty of commercial, you can do both there.
Yeah, well, thanks so much for sharing everything today with us, Jerry. And where's the best place for our listeners to head to if they want to subscribe to your podcast, which I know you know done 50 episodes now, I think, of that,
yeah.
and or just generally connect with you online?
Yeah, so the podcast is the Commercial Property Investor Podcast. It's in all the usual platforms and places. You'll find me on Instagram, Jerry Alexander.commercial. And on Facebook, we have a group for commercial investors, just people that are getting started and are trying to share ideas, because it can be a bit isolating, because it's not quite as, it's a good thing, but it's not quite as popular as residential, so there's less players. So there's a Facebook group, same thing, commercial property investors, just have a look online for that.
Yeah, great.
If anybody wants to look out for me, I'm on LinkedIn, of course.
Cool. Well, we'll pop all of the links to make it easy for people to get in touch on today's show notes as well. So thanks again, Jerry. Really enjoyed that conversation.